Well, welcome everybody. It's April 2024, and you know what that means. It means this month is when every county is going to be releasing the estimated appraisal values for your properties, which means it's time to start thinking about your property tax bill for this year. Joining me is Chase McRoberts with Home Tax Shield, and we're going to talk a little bit about what's happening now, what homeowners can expect when they look at their assessed values, and of course, if you're interested to protest that value, what choices you have in the market. So Chase, welcome.
Thank you, Ryan. I'm excited to be here.
Well, let's talk a little bit about this year. So this is the first year. The state of Texas just had, they passed a new law last year, or at least I should say constitutional amendment that helped reduce some property tax burden from primary homeowners. So there is some good news for homeowners. You might see a little reduction there, at least in terms of that, but it doesn't necessarily impact your appraised value. That can go up, that can go down. Do you have any idea right now what people are seeing in the market? Are they seeing some of the values come down, or are they still seeing values go up? What are you hearing? What are you seeing?
We're seeing a little bit of both, which is what we typically see kind of every year, Ryan. And that's a great question, because what's interesting about it is, generally speaking, you're going to have counties that just going to have a mixed bag, right? So in Travis County, for instance, there was a little bit of a tick up, but then you have other counties in the north part of Texas that they had a little bit of a tick down. So it just kind of varies. Last year, for instance, Williamson was the only county in Texas that actually went down. And these are all preliminary values that are out right now that I'm speaking about. So but you're right. There are two values that we'll dive into a little bit. One being what you're actually paying taxes on, and then what the actual appraised value is of the property.
I probably get this question more than any because, you know, as a buyer, a lot of times the only data they can find might be that assessed value. So they're saying, oh, this house is cheaper than the assessed value, or it's way more expensive than the tax assessed value. What I've always explained to clients is there's four values to every property. There's market value, and that's what you and me would buy and sell a property for on the market. There's assessed value, which is what the county has to come up with to figure out how to tax your property. You're going to have insurance replacement value because you have to figure that out. And then, of course, there's bank appraisal value, which is just kind of a one-time assessment when you're trying to get a loan on a property. And so
that's right.
All those can be different. And so I tell folks that, you know, just to remind everybody, Texas is a non-disclosure state. So if I help Chase go buy a house as a buyer, even if it's in the MLS, there's no public record that says Chase paid, you know, $450,000 for that house, for example. It might be in the MLS, which is considered a private network, but it's not out in public. So the counties have to kind of come up with their way of valuing properties every year. We won't go down the wormhole of the lawsuits from a few years back where we had to battle them to get out of the MLS. But essentially, they've got to have their own formulas. And it is a little different, isn't it?
It is. And, you know, it's always quite fascinating to see what even one entity appraises something for versus another entity, even when you're purchasing property, right? And so that's the same thing here. And I'll dive in a little bit about some of the assessments and how folks can really talk about, or the variances rather, Ryan, on how to fight your property taxes, right? Because there's multiple different ways to fight the taxes. One is the sales approach, right? And what homes have actually trended for and sold for, and what people are actively paying for properties. And then the other one is looking at things being equitable and what people are paying on their actual properties as far as from a property tax perspective, and your home being equitable to others with the same criteria. And so, you know, in the last couple of years, the sales fight has not been extremely successful because values were on the rise for the most part, and it made it quite difficult to fight on a value perspective. From the or on a sales perspective, rather. On the standpoint of equity, that had been an opportunity because not all assessments on homes had been equitable. And you and I, Ryan, think about, well, there's equity in a property, right? We have $50,000 of equity or $100,000 of equity. That's not what we're talking about here. We're talking about things being equitable from a standpoint of, my neighbor across the street has lived there for, and I'm making this up, 30 years. They pay $5,000 a year, but I just purchased my home, so now I pay $15,000 a year. And we do see this largely across the area. And so using, and this is actually public data, by the way. I mean, any homeowner can go and pull this. It's just time consuming to do. But using that and actually reverse engineering it so that you can then leverage that data that the county is using to go and fight your taxes. So just really quickly, those are the two fights that are most valuable for homeowners to use.
Well, and just to refresh my memory, you taught me this, I believe, is that imagine you have a neighborhood and it has 700 homes. So if it has 700 homes in the given year, maybe 30 of them, 40 might sell. So your data on the sales side, if you're looking for comparable sales, is a smaller pool. Whereas if you're looking for the equitable amount, call it the assessed value of everybody in that neighborhood, you're able to pull from all 700 homes because everybody has a tax assessed value. And that's kind of where you see more opportunity, I would say, on the equitable side. It's just harder for a traditional homeowner to do.
100%. And it's very common actually to do this on the commercial side of real estate. So when we talk about this equity fight, this is not uncommon in the business. It's actually been quite common in the business for decades. It's just something that most homeowners have not thought of as an opportunity. And so the company that I happen to represent, which is just one option, by the way, and we're going to talk about this, is that at the end of this call, our goal is for you to know what your options are and ultimately to take action, right? Whether that is through Home Tax Shield or others, or do it yourself. But you have access to this data too as a as a citizen of Texas, right? So we make it available, or Texas makes it available, and going in there and grabbing that data set, and actually figuring out, are you being fairly taxed? And so one of the things that Home Tax Shield's even done is when you go plug in 123 Main Street, and again, I'm making this up, on the site before you ever sign up, you can see what we think we're going to save you. And that's just us running a really quick algorithm on the back end to figure out what we think we can do. And if you think that's favorable, great, go for it. If you don't, then obviously you have that opportunity to pause and do something different. But the equity fight has really been successful in the fact that we've been able to lower taxes and have a pretty strong success ratio that way.
Well, let's take a step back. Let's start a little bit. Let's imagine I'm a property owner. And so what do I need to be doing right now in April? I would say number one, you might get mail from the county. Sometimes it's slow. So I recommend go to your county's appraisal district website. So if it's Travis County, it's TCAD. So you're going to go to that website and they have a property search button. So you're going to click that. You're going to look up your address and you want to see what they are estimating they think your tax assessed value is right now. So let's say your home is worth $500,000 and that's what you think it's worth, and they've assessed you at $550,000. Well, you might feel that you should only be paying tax on $500,000. That's a perfect example of where you might want to protest that value. But the same breath, I could say maybe they only have you assessed at $475,000 and you think you're worth $500,000, yet you know most of your neighborhood might only be paying tax on a $460,000 or $450,000 value. You still have another reason, whether or not it's above or below what you think market value is, to file a protest every year. I typically personally protest every property that we own every year, not because I assume I'm going to save money on every house. It's just a gut check with the county to make sure some of them it doesn't move because it's already fairly assessed. Other ones I might have a pretty significant savings if they were off. So I would say for April, only two steps as a homeowner. Number one, look up your property. And if you have multiple properties, look them up in the county where that property is located. And number two, you have until May 15th that if you want to protest, you have two options. As a citizen, on the back of your appraisal, they're going to tell you, here's how you can file a protest. If you want to do it yourself, they let you do it. This is a totally legal, perfectly set up way to protest that value. So you can do it yourself and they'll set an appointment over the summer for you. Or you have between now and May 15th to hire a third-party company to do it. In full disclosure, I've been using Home Tax Shield for 3 years now. And I would say we have 7 properties, I think, this year that will be doing it. The last 2 years, we had 6 properties. And in the last 2 years, I've saved $15,000 in real property tax that I would have had to written out. So, you know, whether you hire Home Tax Shield or you do it yourself, the goal is you're just trying to reduce unnecessary property tax. I'm still paying a lot of property tax. I am a citizen of Texas. We're still paying the property tax. We're just paying it on what we think is the most fair assessed value. So number one, I think, is the time to figure it out. Let's talk a little bit about if they were doing it themselves, what would be things they would need to know if they were going to protest on their own, the time commitment, what kind of information they would need to bring, and then we'll bring in hiring a third party and how that kind of takes over for them. So let's start with that. If they had to do it themselves, what would they need to do?
Before I do that, for just 1 second, let me share one quick thing.
Sure.
If you do file the protest on your own, and then you get down the road and you want to hire a company, you can't do that. So in Texas,
for that year,
that's correct.
Yeah.
So for that given year, if you get down into it and then you really want to pursue it further and you have not gone the route of hiring a company, just know that you have one opportunity to protest per year. That's our legal right in Texas. And so really make sure that you make the decision that you think is best for you from the get-go. But if they want to go ahead and protest, and the other thing I want to say really quickly too, Brian, you had incredible success. Obviously, your homes were overvalued, right?
Yep.
And here's the thing: we're after a fair taxable number for folks, and so you may not see that number, but you'll see most likely some level of success in actually doing this year after year. And that's the thing here, is that this is not a one and done. This is a year after year activity that you really have to stay consistent with. So let's move into if they want to protest on their own. A couple of things. For one, contact the county, like you said, file the protest if you want to do it on your own, and then actively prepare your data. So if your property has damage, right, like maybe, and it has to be from the beginning of the year. So from January 1, did your property have damage at that dwelling, or was it in need of repairs, or does it have a crack in the foundation or bad roof, or any of these pieces to your home that you feel like are in need of repair? Then you can bring in receipts showing, or bids showing, what work needs to be done, evidence, pictures, and also too, if you want to bring in sales data, you believe that your home is overvalued because now homes are trending at a lower number. We have seen some realignment in the Austin area. It hasn't been drastic, but we have seen some. From that perspective, that's one option. The other option is if you want to go on the county data website, you want to pull the numbers from the general homes around you. What I would be very conscientious about and cautious is just make sure that you're taking in data that supports lowering your taxes.
Right.
What a lot of homeowners will do inadvertently is they will take in data that supports actually having a higher number. Be cautious. Look at this subjectively. I know we're all emotional about our own homes. I love my house. I'm sure you love your house, Ryan. But at the end of the day, you're going to have an arbitrary individual looking at this, and you want to make sure that you're looking at it from that lens too. But those are just some really quick tips.
And let's say that and that comes down maybe to your realtor as well. I've had numerous clients in just the past week. Hey, I need to get some data, to support, protesting my taxes. And what I tell them is just be aware the other homeowners that I might share the data with you may or may not want that data to be in the hands of the state of Texas. But if it does support your lowering the value, so instead of sending you the comps for the whole neighborhood, and use that could have all kinds of data in there. Just try to find one or two homes, if you're using sales data, that really directly tell that story. Because I think if you send too much data, you're just giving it to the county. They're going to use that how they wish to collect taxes. And then the other thing too is if you just purchased a property, let's say you bought that property in 2023. I bought a property in 2023. It was way overassessed for what we ended up paying for it. How good is having a closing statement to help reassess get them to realign it to your purchase price?
I think that's a great question. And here's the deal. If you are going in, and again, I'm looking at this very objectively. I'm not advocating for home tax shield. I'm looking at this from just do something, y'all. I mean, make sure that you take some level of approach to protect and lower your taxes. But I will tell you this, that when you sign up, we are going to ask you for any data like that you have, because it's all leverage, right? For us to go in and use, we actually take in an actual physical human being to fight your taxes on your behalf. Here's the deal though. Sometimes that is helpful, and sometimes doing the data grids that we do on the equity or sales comp fight is better. So it just depends. And at the same time, if we go in with, say, a couple thousand properties to Travis County, many times we actually can do better in leveraging that entire book that we have. Then and we're going to look, right, and make sure that we're getting the best value for your home. But I'll tell you, on my personal property, I'm one of the lowest on my street. It only has to do with that I've been extremely consistent in doing this over the years. However, this started many years ago. And even last year, I got my taxes lowered, even though I'm one of the lowest, because I went in with a group from Home Tax Shield. The county was willing to make a deal for us. They made a deal, and I was part of what I call the herd effect. And then we went back as a Home Tax Shield entity and said, we'll take that deal. It was a percentage that they said they would lower it. However, there's going to be a subset of these properties that we expect to need an additional decrease in what you're proposing. And then we went back and fought those individually. So point is that there's a couple of different ways to look at this, and there's a piece of that herd component that many won't talk about when you do this individually. So again, not advocating one over the other, just making sure that you understand that there can be a advantageous perspective to that as well. But using your closing disclosure, I would leverage and use anything you can. Keep in mind that obviously we are in a non-disclosure state. So like you were talking about using sales comps from MLS, here's one thing to keep in mind. If your neighbor, you take in, for instance, there's two houses across the street from me, both built at the same time. One happened to be classified as a class higher in the taxing entity, so they were being assessed at a higher taxable value, and the other one next door was the class below that. And so what ended up happening is, and they really should have been opposite, because the house that was higher was actually more of a builder grade home than the one that was classified lower. So what that individual did is we helped her, but she went in and she actually said, I need you to look at 456 Elm Street, again, making up the address here. And what they did is they leveraged and used that property to their advantage. That does not then in turn hurt your neighbor. So know that when you use your neighbor to help yourself, or use the values that they have on the books to help you, you're not inadvertently hurting them. That is in the written documents for the way that the county can actually assess. So just one of the things that I want people to keep in mind. But here's the other thing, Ryan. The more your neighbors around you protest, the more it helps you long-term too. So this is really, when I use the term herd, us going in together and banding together, but us going in and really doing this together is the best thing that we can do, regardless of how you go about it. Just do something. And 86% of Texans, and I'll be quiet after this, don't do anything.
Yeah.
So tell your friends, again, any way that this happens, just make sure that those that you know do something.
Wouldn't be surprised, hopefully, if that number goes up, only because, when the pandemic hit, the values launched through the roof. The next year was 2022. And in 2022, everybody saw their property tax bill follow suit. And many counties went up, I shouldn't say counties, but individual properties. Some of them went up 50, 60% in 1 year. There have been some new rules written into the state code that might change that a bit. But point being is that was sticker shock to all sticker shocks is when that went up. And so I think my phone started ringing much harder once people realized, hey, I got to do something. What can I do? So I think that not only hopefully is making people more conscious of the fact that they need to take an active role in monitoring what their assessed values are and if they need to protest. And I think that also puts some political pressure on the state of Texas too, to kind of look at how they tax homes. So let's say now we filed the protest. I've hired Home Tax Shield. What does the rest of the calendar look like? So I'm done. Sure. It's May 15th. I hired my protest company. What can I expect for the remaining part of the year?
So it's pretty straightforward. What we're going to do is we're going to file the protest for you. We're going to send in our tax liaison to go in and fight these on your behalf. They're going to take the data sheets that we've all prepared. And even if we have to go through the nth degree, right, to make sure that we are doing what's necessary, we try to avoid arbitration. We have gone to that degree for a couple of homes that we just couldn't get the result that we felt like we should. But then we're going to notify you sometime in the middle of the summer of where we are. Through this process, though, you're going to have a portal. So you'll have a portal and you'll be able to track, much like you order, from your favorite pizza place, right? And they show you where they are in delivery. This is sort of the same approach. We're showing you exactly where we are in this process. We'll also text you to keep you up to date so that then you can log into your portal and see where we are. And then once we're successful on fighting your property taxes, there is a success fee that comes with that. And that's actually how we make our money. And it is based off of how successful we are for you. So before I kind of dive into the pricing structure here, let me just say that if there is any success fee that is owed, that will not be owed until October or November. And that's just when our billing cycle is. That's when your taxes are due. We feel like that's fair. And even though we're going to be done with that process long before that bill comes due. What I will say, though, really quick before we go even any further, because I think we should kind of cover the pricing perspective here too. One common question that I get is, what happens if my taxes are escrowed? And then I do reduce my taxes. Well, what you're going to see is ultimately you might have a surplus in your escrow. And then that following year, when it is realigned and rebalanced, if that surplus is greater than what is necessary, then you might actually get a refund from that escrow account. That's just going to depend on what that reduction was, but it is something to be aware of, that's what that would look like if you have them escrowed.
I would say on another level, whatever you reduce your property tax, you reduced your property tax, whether it's escrowed or not. It's simply the same number. It just matters, are you writing the check yourself, or is your mortgage company writing that check for you? You just might find out later. But here's what I find out with a lot of people that have escrowed mortgages is they're not paying attention, because they know that their mortgage company is taking care of their insurance and taking care of the property tax. And so typically they're not going to take the step to go look up their property and see if it needs to be protested and do it. So I actually highly encourage, if you have a mortgage, if it's escrowed, you still need to do this process, because even if the mortgage company is going to take care of it, you have to fight it now. You can't wait until next January when you get a letter that your taxes went up and then call us and go, oh, wait, can I go back and protest in reverse? No, you cannot protest in reverse. So you have to do it now before they set the bill in the fall. So that's why you kind of have to be proactive with property tax. Before Chase talks about their structure, I can just tell you there's a number of companies in Texas that you can hire. There's some law firms, there's other big names. Typically, they're going to charge somewhere between, I've seen 30 to 50% generally as a success fee, and that is not on your total property tax bill. That is just on the savings. So if they saved you $1,000, you're paying a percentage of that. And so typically that's how most of them are going to work. And it's based on, as he said, success. So ultimately, if you're already fairly assessed, you may not owe anything. But if they save you a huge chunk, it's a percentage of that. And so again, I've been using Home Tax Shield for several years. And typically you have a couple choices. You can pay them as soon as you get the invoice from them, which is early in the fall, or you can wait till you pay your tax bill and then pay them at that moment as well.
Absolutely. And here's something that I'll share too that is unique about Home Tax Shield and that I have not seen another do. Now, maybe there's some out there. If your exemptions that you have on your property are greater than the savings that we're able to get your taxes reduced by, you do not pay on the value that we reduced. We base it off of what you're actually paying the county. So meaning because now the homestead exemption is worth $100,000 in value reduction, right? So just for easy math, we could get in the weeds here, but let's just keep it easy. I have a $500,000 house and I reduce my taxes to $450, right? So I was initially assessed at 500. I sign up with a company or I do it myself and I get it down to well, let's say I sign up with Home Tax Shield, I get it down to 450, right? But I have a homestead exemption on there that actually reduces me to 400, right? From that perspective, that means the homestead exemption was worth more, even though I got my appraised value down to 450. So I'm winning from the perspective that next year, if I have a 10% increase again, I'm starting at a lower number because I would have been starting for 500 if I did nothing. So you're still in a better position moving forward. However, there is nothing owed on the success fee side. All you would owe is to sign up for the first year. We do have a sign up fee on the front end. And if you sign up with Ryan's link, it's going to be $15 for your first year, or any sequential years, $30 from there. And but if we were to lower that property, just for instance, again, it has a homestead exemption to 375, then there is going to be success fee owed on the $25,000 in taxable value. So
Yeah.
exactly. So if your tax rate was 2%, you do the math, $25,000, 2% tax rate, whatever that value is, it's going to be reduced by that number. So just some easy math to kind of keep it simple for folks.
Cool. And I do have a partner link, it has my name on it. And just know I'm not receiving any direct commission or anything from that, but Home Tax Shield is nicely making a little charitable donation if anybody signs up using that link. So I've probably had, I don't know, 30 or 50 clients, I think, over the last 2 or 3 years sign up, use Home Tax Shield, but they're welcome to check out the other players in the market space as well. I think the most important thing I would highlight is that you have to be proactive with this. You need to go look up your values on your properties. You do have until May 15th, but that date's going to come up pretty quick because we just passed April 15th. So you only have about 4 weeks. And it's this little small window they give you every year to kind of figure out what your assessed value is and then file the protest. The actual bill is not going to arrive until November, typically, maybe late October, but it's usually November when I get it in the mail. And then if you're paying it yourself, then you're going to pay it in December through January 31st, typically is when you pay your property tax bill. So I think right now, is there anything that you're seeing change as the county changed on any new updates with them on how they're handling protests? Are they certain data they're looking at, or is the process still pretty similar on what they're looking at every year?
Yeah, I mean, I think it's pretty much status quo right now. The big update was the exemption change, right, for the homestead, the valuation. But nothing major has changed on how they're evaluating properties from what at least I'm seeing thus far this year.
Good. What else should we know about Home Tax Shield before we wrap it up?
You know, one, and this is not about Home Tax Shield. There's one other piece of this that I want to share that has come up quite a bit for me over the last year, that I would say agents reaching out to me saying, my client is interested in purchasing a property that doesn't have exemptions on it. This is their primary home, or maybe it wasn't. They have not been fighting their taxes. Their value has gotten out of control. What should I do? If you know that that's the case and you're going to move forward on that property, there are options, and you can talk to your agent about possibly having them engage in doing something like this with protesting before. But again, this just goes back to know what it looks like, take action, and do something about your property taxes this year. Because like Ryan said, time is of the essence. We have about 30 more days here to go.
Add one more thing since you brought that up. So I have had some clients, and we try to do our best to remind people, after you buy a property, you have to separately go and file a homestead exemption for tax purposes. And every once in a while, somebody slips through the cracks, forgets to do it. And all of a sudden you realize they've been paying thousands of extra dollars a year because they haven't been telling the county that's their primary residence. So when you go look up your property, you can also see what exemptions are listed on that property. Now, some of the counties are very slow. So if it's something you just did in the last month or two, it may not be there. But just know you have the opportunity to reach out to the county and make sure that your homestead exemption or senior exemption or veterans, any exemptions that you have on that property, make sure to check that. And every once in a while, if you refinance that property, or if you move a property from your personal name into an LLC, the county might think you sold it. And so they have the opportunity every time there's a transfer of deed ownership that they might reassess it up to what they think, even if it had some exemptions on it in the past. This can happen even on a primary residence. I've seen it happen a few times. So it's just the opportunity to do your research stage right now, to go look it up, see if you can catch any of those little things that have maybe shifted your value. And then, of course, you can reach out to me if you're trying to figure out, well, what is market value for my property right now to compare with the assessed value. We're, of course, happy to do that. But are y'all busy right now? I'm assuming this is the season when everything's coming in.
This is the season, and we will be extremely busy this next month. We actually find out that 90% of people sign up in the last 2 weeks. So we are ramping up. We have, I guess, with those numbers, we have about 10% of our clients signed up thus far. And a lot of people just auto renew and want to stay consistent in this process. With what you said about the exemptions, it's extremely important. And I'll just remind everybody that's watching, if you missed your homestead exemption, they will allow you to go back 2 years. So make sure that you notify them. And if you've owned the property for 2 years, that you actually backdate it. They might need your closing disclosure to see when you purchased the property, et cetera, but just something to be aware of too. But we are busy. We're excited. This is going to be a great year. It's always exciting to be able to see what we can do. And again, we just want Texans to pay what's fair and what we feel like we should rightfully pay. So,
well, the market has adjusted. If you have not been watching my videos each and every week, the market has shifted. Austin peaked in 2022. It's had some softening, and so there is a chance that the assessed value might be higher than your market value. Just one more reason I think it's time to look up your property. If you need help with that, reach out to me. If you'd like to learn more about Home Tax Shield, Chase, other than my link, is there another way that they can reach out to you?
Well, you know what? Your link is fantastic because they can actually engage and chat with us directly. There's a whole team, myself included, will answer your questions. If you want to reach me directly on email, I'm just chase@hometaxshield.com. Happy to help in any way that I possibly can too.
Chase, appreciate it. I will be leaning on you for my property tax protest help this year. But if anybody else wants to reach out to me, learn more about the process and just what options you have with property tax protesting, definitely do so. I'll be sending this out to everybody in my database, and you can find this video on YouTube as well. But Chase, hey, appreciate the time.
Thank you, Ryan. Always a pleasure.
Thanks, Chase. Appreciate it.
Thank you.
All right. Take care.